Maersk has announced improved financial results for the first quarter of the year, driven by momentum in operational efficiency and a healthy global economy, according to the company's CEO, Vincent Clerc. In particular, the shipping giant reported an 8% revenue growth, reaching $13.32 billion, an increase in EBITDA from $1.6 billion in 2024 Q1 to $2.7 billion in 2025 Q1, and a surge in EBIT from $177 million to $1.25 billion. Therefore, Maersk maintains its full-year 2025 guidance of underlying EBITDA of $69 billion, underlying EBIT of $03 billion, and free cash flow of at least -$3 billion. The global container market volume growth has been revised to -1% to 4%, given the increased macroeconomic and geopolitical uncertainty, according to the Danish liner operator, which expects to grow in line with the market. In a move with significant implications for global trade, U.S. President Donald Trump announced a halt to American airstrikes on Yemen's Houthi forces, following a reported ceasefire agreement, mediated by Oman. The agreement, confirmed in a statement by Oman, stipulates that neither the U.S. nor the Houthis will target each other's assets, including American naval and commercial vessels operating in the region. However, the ceasefire does not appear to include a commitment by the Houthis to halt their missile attacks on Israel. This week, several new services have been announced, marking important developments across key global trade routes. Poland's Baltic Container Terminal has welcomed a new service from MSC, enhancing its position as a key gateway in the Baltic region. In another strategic move, Emirates Shipping Line and Wanhai Lines have announced the launch of a joint service connecting India and the Eastern Mediterranean, strengthening trade routes between South Asia and Europe. Meanwhile, Ocean Network Express has made headlines with its 13,700 TEU container vessel, making its inaugural call at a terminal in Ecuador, signaling growing connectivity between Asia and Latin America. In the Caribbean, Hapag-Lloyd has adjusted its Caribbean Express service by swapping its UK port of call, a decision aimed at optimizing its network efficiency. Finally, Arcos Line has doubled the vessel capacity on its Turkey-United States service, reflecting rising demand and the company's commitment to expanded transatlantic coverage. Port congestion, particularly in Northern Europe, is raising concerns of increasing delays and rising port charges, as ports struggle to handle an increase in trade and the number of vessels calling at terminals. According to Linerlytica, an increase in the number of vessels redeployed from the Pacific to the Asia/Europe trades is having a detrimental effect on European rates, while a surge in Asian cargo to Europe is expected in May. Waiting times were more than 2 days for Bremerhaven from mid-April, but congestion had eased by the end of the month. Delays to vessel arrivals caused over 60% of respondents to reschedule appointments and had to notify stakeholders, while only 48% said that they built a time buffer into their schedules. After more than 50 years of using gray containers with white lettering, Maersk is updating the look of its dry containers to reflect a more modern and distinctive brand identity. The Danish shipping giant will now manufacture its dry containers in Maersk Blue, featuring white lettering. This redesign will apply exclusively to new containers, as repainting the existing fleet would be prohibitively expensive. Each unit would require approximately 90 liters of paint. Maersk has already placed an order for 85,000 new containers in the updated design. With an average container lifespan of 18 years, the full transition to the new style will occur gradually over the coming decades, as older units are phased out. Notably, the change does not apply to Maersk's refrigerated containers, which will continue to feature the current white color, with black lettering.